Good evening, everybody. This is Dr. Dan with iFund Traders. It is Wednesday, December 8th, and we're about to do the Trade of the Day review. Oftentimes in markets, you will see repeating patterns on a daily basis, and when you get to play individual stocks, you'll notice that they're the same power players in that stock day in and day out, and they tend to repeat their behaviors. And we teach our traders that it's one thing to know an overall pattern, it's another thing to know an individual stock. And the more comfortable you get playing a stock, the easier it will be for you to recognize the nuances and the subtleties of that particular stock. And you start to get what I call a feel. Okay, it's your gut feeling about playing inside the bars or knowing when a stock is about to make a move, or even when a pattern may look good, but you just kind of feel, you know what, when it does this, it tends to fail. And it's hard to know that for thousands of stocks. So, we teach our traders get a handful of stocks that you're very comfortable with, trade the same stocks day in and day out, and you'll really become familiar and comfortable with those stocks. Now, as an example, I want to go through a lesson with you here about repeating patterns, and I'm using the same stock to show you this phenomenon. So you have two charts up here. This chart on the left is of UAL, and it was from December 7th. This chart on the right is also UAL, and it's from December 8th. So let's go back through this chart first on December 7th, and let's take a look at this pattern and this play that we did in the trading room. Now, this is the opening bar right here on the day. Okay, so this is your 9:30. It's a 5-minute chart, and we get this little sell-off here going into the 10 o'clock reversal time. Now, at this point, you look at the MAs, they're slightly declining, and this is a decent move down. But if we're going to play what we call a climactic or a counter trend move, we need to see some wide bars, 5 or more bars down, and we need to see separation from the moving averages. So here we have a 4-bar drop, and then we start to get a fifth bar that looks somewhat big, but we don't have the separation yet. So this is on a watch, or what we call a stalk. We're going to sit, we're going to wait, and if we get the completion of the pattern, then we're going to play it. So as we move this forward, take it on a bar by bar look here, okay, it gives us that finish to the pattern. Now we have the wide bars down, we have some volume surge, and we have separation from the moving averages. So at this point, we can look for a reversal bar, and if we get one, we can play this for the bounce. We can play this in the long direction. Now, when this bar printed, it had the biggest volume of the morning, and it gave us one of our reversal signs. All right, it started out opened, traded down red, created more separation from the MAs, and then reversed and went green. Now, that's enough for a trader to take an entry right here, or second option is you wait, and if the high of this bar is taken out, you go ahead and take an entry. Now, on this particular trade, I did go in a little bit early. I did not wait for the confirmation. I liked the play, and I took an entry at 25.80. All right, instead of waiting for it to clear this high. This high, I believe, at the time was 83 or 84. You can go back and check the exact print. But I did take it early, got in the trade. I like these kind of trades, and I wanted to be in. Now, the next bar, now again, is the stop under the low. Doesn't matter if you took it early, doesn't matter if you wait for the next bar. When you're playing these types of plays, the stop is under the low, because if this thing fails, there could be another move down equivalent to that first drop or more. So you don't have the luxury of saying, well, I'm going to play the bounce, and if it doesn't, I'll just wait and see. All right? So these are trades that have big potential, but if they fail, they can be nasty on the other side, so you just take a stop and move on. And then you could stalk it again for a second entry. You get a little bit more advanced, you can stop and reverse the position. But I don't advocate that for a new trader. All right, so let's go ahead and follow this through. Next bar. Now, because this did not trigger over the high, if you took an early entry like I did, you're subject to this stop, and if it happens, you got to take it. And you notice that the volume got even bigger on this bar. Now, it didn't break the low, and we often teach, and I stress this in the 2-day courses, that tails will often be retested. And it's okay if they're retested as long as they don't break. And you want the retest to be immediate. Maybe a little trigger, and then it comes right back down in the bar. All right, we call these shakeout bars. It makes the weak hands get nervous, right? They get out instantly. Sit on that tail low, use that as your stop. If that breaks, jump out. And if it knocks you out and whipsaws you and snaps back and goes green, you just have to take your second entry. Right? That's just part of trading. So right here, it may look like, oh, made a bad choice, we made a bad decision, but our stop has not been violated, so there's nothing we can do. We just have to wait. Those of you that were patient and said, well, I didn't take the early entry, you never had a trigger anyway, so you're still in stock mode. All right. Now again, the next bar turns green, comes right back up to where we started. So now we're getting a little consolidation move here. We're forming a little bit of support off of this tail. And we still have this massive separation from the MAs, and this 20 tends to act as a magnet when you create a lot of space, meaning price is either going to drift and the 20 is going to be pulled down to meet it, or as the 20 is declining, it's pulling up and the price will retreat towards the 20. All right. Now, this, my traders know, is a red bar ignored. It's a textbook, picture perfect, beautiful trade setting up here to add to the position. It's not the intent of this video to go through that, but this is an ad for our traders. All right, and now we get a trigger on the red bar ignored. So we had our first true stock entry came off of a bottoming tail, a failure of a red bar to break the tail, a followed through green bar, and a red bar ignored. So there was a lot of good things setting up here when this thing finally triggered for the stock entry. I had taken an early entry, so I was sitting and waiting and waiting and waiting, then added a little bit in the red bar ignored, and now we're going to see if we can get to the 20 MA. Now the initial target for me was 30 to 35 cents. If we got 40, I thought it was a great trade, and then we just wait and see if the stock can make it to the 20 MA. All right. So on this point here, as we rallied up, all right, we hit the 40-cent target. And on that little bar, even though it didn't quite get to the 20, I had a profit target hit, 40 cents, took part of the trade off. Now the 8 MA is turning back up favorably and is above my entry price. All right, and we teach our traders leave some portion of your trade on for the 8 MA as long as it's above your entry and go for your big targets. All right, if you hit your first profit target, you could take it all, but you have the potential for a bigger move. Let the trade work. Now you could either use this low, this little pivot low stop, or this 8 MA hook and try to ride this thing into and possibly through the 20. All right, now we've hit the 20 MA. That's the ultimate target. At this point, go to the bar by bar trail and the 8 MA. Split what's left. If you only have half your shares left, put a quarter on the bar, put a quarter on the 8, let it go. And you should be taking something off at your target. All right, and now you see how this played out. It holds the bar by bar trail. The 8 MA picks you up, and you squeeze a little bit more profit out of this thing. All right, and then finally breaks the 8. So you end up about the same target. So you didn't really get much of a home run move after your original target, but you never know which ones you're going to get. All right, so this was December 7th. This was the morning play, UAL, little climatic reversal play. Now let's go to the next day. Here's December 8th. So the very next morning, this first bar is the 9:30 bar. This drop is the first 4 bars of the day. And again, it's not enough. We don't have the separation. We don't have the wide range bars, but it's got the potential to repeat the exact same morning pattern. So the day before, we get a little climatic sell-off and we play a beautiful bounce. This morning, the stock looks like this after the first 4 bars. And now look what happens. We get a 5th bar down, huge volume surge, separation from the MAs. It's setting up to do the exact same thing. So all we need is a trigger bar, a signal bar, and this time instead of getting a bottoming tail, we simply get a green bar reversal, right? And it's I wouldn't say it's one of our textbook narrow range bars, but it's a nice small green bar inside the bottom third of the red bar. Now this has the potential to be one of two things: a powerful signal for reversal, or if it fails, you get a big continuation move. So this is kind of a nice play because you can take it in either direction, whichever happens. If we trigger long, we play the bounce. If we trigger long and immediately fail, we stop and reverse and we play this for a green bar ignored and we go short. So it's a nice setup to have when you have 2 options on the trade and you don't really care which way it goes. All right. Now, if it trades above this high, That's a trigger for the long. Stop goes under these lows. And you can see it's the same point, so it's a very nice stop. Okay, you've tested it twice. It's held over this high, enter, under this low, stop. So there's your trigger. You're now in the trade long. Right? And again, we're looking for a profit target of some amount of money based on risk reward, and we're looking for a move towards this 20 MA. And the same effect. Either this goes sideways and the 20 gets pulled towards it, or as the 20 declines, price rebounds towards the 20. All right, now after our initial entry, and I believe our entry, you have to check the high of this bar. I believe the entries were 90-ish, 90, 92, somewhere in there. And whole numbers we've talked about before in other vids become natural support and resistance. So as this triggered, it bumps its head on 25 and it starts hemming and hawing as it gets toward the 8. As long as your stop is under that low, that's your worst case outcome. You got to let these things work. And notice how this yesterday took. Here's the signal bar, and it took 1, 2, 3, 4. Really took 5 bars to get going. Right? To really break through that 8 and really start that move. So look at today. Here's the signal bar. 1, 2, 3, 4, 5 bars. So these patterns are repeating themselves as closely as possible without it literally being, 100% identical. It's almost the same thing here. As we have a climatic drop, we had a signal bar, a couple bars of hesitation, and then we get the move. So instead of it being, red, green, red bar ignored, we got green and consolidation and then the push. Right? But there was not the instantaneous snapback rally 2 days straight. Same pattern. So now we're going to go for 20 MA and our first profit target. All right. On this move up, we got the profit target I was after. Right. 25 was the call in the room. We hit it, and I think I got fills around 20. And now we're going to do the bar by bar and try to get to and through the 20 MA with a bar by bar and an 8 MA if it can hook underneath and hold us. Okay. Now the bar by bar. See this bar right here? Then this one closes. Your bar by bar gets taken out. Okay? But your 8 MA is not broken. So now you still have your back half on the 8 to see if you can ride up, tag the 20, and possibly get through it. All right? Now here's your entry at the or here's your target at the 20. Same price that we already had once before, so I didn't take any additional exit because I only had half the trade left. And what I did at this point was split the trade again. All right, I'm taking the half and I'm splitting it to a bar by bar since we hit target and an 8 MA. And it's almost the exact same location at this point. So you're splitting hairs here. It's just a process of doing the same thing on every trade. All right, now we get a nice little rally. You can see right in here the bar by bar breaks, so a little bit more comes out. We're still riding the 8 MA, and then 8 MA rolls over, and on the next bar it breaks. Okay, so the trade's done here. Right as it came off of 50, broke the 8, that was it. Time to go to lunch. Good trade, good morning. All right, so guys, look at these two charts as they've played themselves out. 2 days in a row, same pattern, same stock, same behavior. All right, go back and watch this video a few times and you'll start to understand that stocks do have a personality and they do have a behavior that you can learn to get in groove with, you can get in sync with, and you can become very comfortable once you understand how that stock tends to move. Comparing different stocks, you will see, even if it looks to be the same pattern, the way that they form, the speed at which they form, the behavior inside the bars as you're watching the price move, the speed at which they move is very different from stock to stock. But if you watch them enough on a daily basis, you will get to understand and be able to feel the stock. You'll train your gut and you'll be like one of the market makers in the stock. You don't have enough power to move the stock, but you'll understand the players that do. Hope you enjoyed the review, the trade of the day review on repeating patterns, and we'll look forward to seeing you next time at the next lesson. Take care.